During Trump's second term, the media, the courts, Congress, nobody's been able to stop him except for the bond market. And right now on Saturday, May 23rd at 8:20 Eastern, when it comes to this Iran peace deal that's coming together, they may be holding him accountable one more time. We're about to get into it. This is It Bad for the Economy?
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things that way. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy? My name's Kobi. I'm the Democratic strategist trying to figure out how the Democrats can finally get the credit they deserve for outperforming Republicans on the economy for my entire lifetime. And I'm joined by the anonymous Banker Bill, who's keeping me honest and who's doing some great work at a bank you've definitely heard of. Banker Bill, back on a Liberation Day, when Trump finally caved and announced the 30-day moratorium or whatever it was at the time, you said that the bond market was essentially the final boss of capitalism. This was the big money behind the big money, and this was the group that Trump was finally never going to be able to truly screw with. This entire time I've been asking you, why does Trump get away with messing with the money? And you've said, well, he can only mess with the money to a certain point, and that's when the bond market gets upset. The magic number that seems to express bond market outrage is 5%. When the 30-year treasury yield hits or goes above 5%. It got close on Liberation Day. He backed off. It got close when Trump was getting serious about Greenland. He backed off. It got close when Trump first attacked Iran. And it got close and he backed off and did the ceasefire. Now it's finally exceeded 5%, the first time in years and years and years. And Trump seems to be hopefully backing off in Iran long term. Is that how you see what's going on with the bond market right now? Do you think that they're trying to hold Trump accountable, trying to make it clear that this Iran stuff has got to stop before the energy crisis and the economic crisis that could result of it gets, baked in?
Yes, I think the movement in the bond market throughout the curve is pricing, sending warning signs about the supply shock that's happened with this Iran conflict. That's exactly it. And I think, again, it's the 30-year. 5% is the line in the sand. That's at near 20-year highs, I think. The difference is the 30-year is at 20-year highs. It's where it was in the mid-2000s. The U.S. budget deficit is something like 6% right now and has been basically in the post-COVID period. Back then, the U.S. budget deficit was about 2%, 2.5%. So the implications of the higher rates are immediately felt. There aren't that many auctions for the 30-year yield. It's not a deeply traded market. But the 30-year is the one that the government and the Federal Reserve can control the least or exercise the least control over, and are, the one that definitely market participants would turn to.
So would you predict that the peace deal that comes out of whatever conversations Trump's been teasing on Truth Social right now tonight, that they're going to be pretty solid and back us down and be de-escalatory?
Oh, I'm not sure. I would say this. We're a few weeks or just 2 weeks. We're just probably a couple weeks away from even higher gas prices. Much of the lid on this has been keeping oil prices from rising higher by the U.S. reducing its reserves, right? And China is having large releases as well. I did read something interesting, which was there was thought that, in China, they're getting demand destruction because China's oil reserves aren't coming down. The suspicion now is that China has these off the books supply that they can release into the market. And they are already, from their reported number, something like 1,500 million barrels or something of crude stocks, much higher than the US, which is, 300,000, 400,000.
I heard some folks speculating that they had underground reserves that they were tapping.
Sure, but not posted. Previously unknown reserves is the speculation I'd seen.
But I think just for everybody who, like me, has been frustrated that the market's not holding Trump accountable, that Trump's being allowed to mess with the money, this is the line.
30-year, if it were to become unanchored, which is a consistent drag higher, it would signal a severe loss of confidence in the long-term fiscal stability of the United States. drives up consumer interest rates, mortgage rates, puts pressure eventually on equity markets. Now, that's the one thing that's interesting so far is equity stocks have not responded to the bump back up in interest rates. They've continued to make new all-time highs. So the risk on trade continues, right? This Iran shock has not had much of an impact to equity prices thus far.
The connection there, of course, being we're talking about the cost of borrowing, the cost that it takes for the United States to borrow money from the average person, the average investor. If you are expecting that return to come back in 30 years, that bond to be paid back in 30 years, the rate of interest on that bond is what we're talking about right now. That's the benchmark for all corporate international borrowing and, of course, the 30-year mortgage, which is why this is politically so important. But the question when it comes to corporate earnings, and corporate earnings just again posted an amazing number. This has been the statistic that you've been pointing at to explain why at the top line, the S&P 500, those kinds of numbers continue to go up.
Profit margins are strong. They should be, right? With tax cuts and the government spending and a U.S. consumer that, no matter what, continues to spend.
Well, and I think this is an important point that you've been making to say that the narrative that the economy is just AI, is just data centers is a bit overblown. Folks are making money.
Yep.
But I do want to ask, is this sustainable? Is there a point at which the high cost of borrowing is finally the thing that forces the stock market to cool off? Because they're just, again, you've been saying this entire time we've been having this podcast for the last 2 years, there's a lot of fat in the system to burn off. Is that how it finally gets burned off?
Look, I think that with rates where they are now, the problem is the forward outlook for rates is higher because of populist tendencies, right? It's basic stuff like, hey, we have a supply shock, so let's get rid of the gas tax. No interest from Congress to correct the U.S. fiscal trajectory or position, and higher inflation due to different supply shocks that now these one-off 100-year supply shocks seem to be happening every couple of years, and a U.S. economy that, whether it's part of government spending or its own U.S. entrepreneurialism, continues to grow. So until you see something like that break, I mean, what is the breaking point? I don't know. I mean, 5% is definitely breakout in the 30-year, because you haven't seen that figure really until what, 2008, 2009, pre-financial crisis. But look, rates are going higher, mainly driven by inflation and growth.
We've adopted the Hallmark boyfriend, big city boyfriend analogy for there will come a day when investors are finally sick and tired of the American deficits, of the American debt. Again, are we seeing the beginning of the end of that? Is this the bill starting to come due?
Look, I think the risk is that the U.S. is just no different from anybody else, right? We don't get a special privilege. Who said that? De Gaulle? He said that the United States had an exorbitant privilege. I think that's the risk, and that we're just another shirt in the laundry pile, and maybe we're the biggest one, and we have to pay higher rates like everybody else. And then whoever is the new standard bearer for, low rates, it may be nobody. We may, because of the, this kind of regionalized world we're going into, there's structurally higher costs associated with that. One of them is higher interest rates.
This is happening everywhere, right? I think Japan just posted their all-time high number. UK, I saw 28-year high. And it's interesting that you say this populism thing, right? And I think if you're talking about it in the context of the international bond market, you could understand why those folks are getting really upset, getting really suspicious that the fiscal conservatism is never going to come back in the United States or anywhere else, right? Conservatives are the ones who are leading this populist moment. And I thought it was funny that you used the gas tax example, because when I was doing my research and looking at what other economists are saying, that's exactly the same context they used.
All investors are demanding higher rate of interest in response to the actions of the voters in those countries. I mean, if you're asking me as an investor, here's how I see it. Okay, so you voted for somebody who said they were going to pump up the deficit and continue running high deficits with tax cuts. They did exactly that. Okay, then they went and did this supply shock with the Iran conflict. Okay, they did that, but you voted for that guy. And now on top of it, you're saying you're going to make matters worse, and you don't have a way to pay for what you're doing. So you're going to actually cut taxes. And the whole reason why I docked you in the first place for running a high deficit, you're just making it worse. You probably don't deserve my money. So I'm probably going to charge you a little bit more.
I think there are tax increases coming.
Oh, yeah. I mean, there's going to be so many things will have to happen, whether they are phantom taxes, direct in your face taxes, cuts to things, to programs, not indexing things to inflation, changing how methods are calculated. You already see Kevin Warsh wants to change the goalposts on how inflation's calculated with trim CPI ridiculousness. The only reason why you haven't adjusted numbers because the real number is one you don't like, right? So,
as somebody who's been fighting the redistricting battles, that sounds all too familiar from the political side of things. I'm glad you brought up Kevin Warsh because I have to give you credit again. You predicted that the bond market would get testy the second Kevin Warsh came in as a test to see whether he was going to respond to them or not, whether he was one of them or not. And I think when you have a president like Trump who's threatened Fed independence as much as he had, that challenge is especially important when it comes not only to the keeping the bond market happy, but keeping the economy sane. Kevin Warsh has a very, very hard decision to make. Is he going to respond to the bond market, sitting him down and saying, listen, we are not happy with the economy. You're not going to cut interest rates right now. That is not what would make for a healthy, stable economy right now. And President Trump, who's been demanding just that since he came into office. I do have to give him just the tiniest bit of credit for transparency's sake. Publicly, now that he got what he wanted, he's saying that Kevin Warsh should be independent. I don't think any of us believe that. Based on what his favorite sycophants are saying, Myron and Hassett, I think he's still demanding big cuts behind the scenes. Do you think that this sort of bond market unhappiness is as much about testing Kevin Warsh as it is about everything else we just talked about?
Sure, there's potential that the market is using the coincidence of the Iran conflict to test Kevin Warsh. They don't know this guy. It's coincidental that it's happening right now, but sure, the market's maybe using it as an opportunity. I would say, too, Myron is now off the Federal Reserve. He resigned in order for Kevin Warsh to be nominated and appointed because, as we know, Jay Powell has stayed on. So what we did was we traded Steve Myron, who couldn't get anybody on the Federal Reserve governors there to agree with how he saw things. And the administration, in the short term at least, has promptly embarrassed him on all of his views with their own actions. But notwithstanding, I think it's a plus that we traded Warsh for Myron. But now Warsh's credibility is immediately at stake because if he tries to come in and exercise views that are similar to Myron's or even on that side, I think he may lose the room of the Federal Reserve and the market's going to push yields higher. If he is the Kevin Warsh that cut his teeth when he was at the Federal Reserve in the mid-2000s, he could be a stabilizing force for interest rates and the geopolitical outlook.
Myron has been saying cut, cut, cut. Myron's been saying cut, cut, cut because he expects inflation to come down and he expects AI to have this incredible supply side moment. And he's saying, look, if we cut interest rates now, it's going to take forever, or if we increase interest rates in order to address the immediate shock of Iran, it's going to take forever for those effects to be felt in the economy. And by then the Iran thing is going to be washed out and the AI benefits will have already come online. I don't want to relitigate that fight. You think it's ridiculous. We've quoted lots of people who think it's ridiculous. It's maybe that moment's coming. It's not coming in the next 6 or 12 months.
Yeah. For what it's worth, I would just say I would not raise rates right now. I don't see how raising interest rates, a financial response to a physical problem, would help the issue.
Do you think the bond markets want Warsh to hold steady, or do you think they actually want him to increase?
Yeah, they want him to show a backbone for sure. I mean, The Fed definitely can't cut him. I think Waller's saying it's 50-50 basically, whether we hike, whether the next is a hike or a cut. I thought that was charitable.
But do you think the bond market will consider holding firm to be a compromise or good enough?
How do you mean by that?
Do they want a rate increase or did they just want him to display a backbone?
What they want to see is inflation going back to 2%. They're not getting it. Now they see a supply shock that's going to last longer than anybody in politics is telling you it's going to last. The market is right. People are wrong. The market's almost always right. Look at what the market is telling you.
Look, this is a silly prediction. You obviously don't know him personally, but who do you think is going to win? Do you think Warsh is going to listen to the market or listen to Trump?
Well, again, I said this before. Warsh is only one vote. But right. He has to establish his own credibility by you definitely can't cut. So like Myron's kind of outlook is going to lose the room and is going to push. If he starts advocating for cuts, he's going to get immediately challenged by the bond market again. Yields will move higher. I would predict that. If he comes out and says The Federal Reserve should cut, right? If no less direct than that, yields would move higher across the curve, 100%. And it would be a big move, man.
Well, it used to be that you would hear absolutely no gossip, no scuttlebutt out of the Fed. That's changed a little bit now, mostly out of self-defense, because as they've come under fire from Trump, from the administration. If you hear anything about how Warsh is being affected by Powell staying around the Fed, whether folks are treating him like he's still the Fed chair and ignoring Warsh, I hope you let us know.
I doubt that would happen because that's not Jay Powell's reputation. And that wouldn't be how the people at the Fed conduct themselves either. I think the only way it moves that way, where you get some of that political posturing and gossip, is if Kevin Warsh embarrasses himself.
Yeah.
That's the only way. If he comes in and he's a balls and strikes guy, like there are other people on the Fed who Trump has appointed who are balls and strikes people. If he's that, then, I think he could put a lid on rates. He can.
I'll say this: if he holds firm or he increases rates, he demonstrates that he is truly independent from Trump. I kind of have some egg on my face as somebody who's been complaining about him all year and saying he's a sycophant, and he went back on everything that he said to try to get the position and all that. Look,
I think it's going to be hard for him to move at all, Kobe. But I think you're going to see a lot of dissent.
Well, will we see dissents? Because he wants to get rid of
I
dissents.
think so. I think so. He could try to get rid of dissents. I mean, but like.
And what we're talking about is the dot chart. Everybody votes.
Sure. There are reforms. Maybe that he says, hey, we put out so much stuff we don't control necessarily, but we want people to focus on. And sometimes maybe people focus on the wrong things. So maybe we should pull back on. There's credible points to that. However, the idea that he is going to potentially muzzle and prevent people at the Federal Reserve, governors or Fed bank presidents, from talking at a chamber of commerce or at Georgetown University or University of Wisconsin is not going to happen.
And if he does cut, let me just tell you, just like I won't shut up about being right that Besant was a total hack simply for wanting to be a member of this administration, I'm going to be real mad at everybody who tried to make us take Warsh seriously by calling him an inflation hawk.
I really think that'll be the least of our problems.
I know
inflation, Kobe, that will be bad.
Fine. Okay, fine. It's not all.
We don't want him to do that.
No, what did I call it? Is it bad for the economy? Good faith guarantee. We always want the economy to do well.
Thank you.
The Republicans have given us Democratic strategists some really, really big gifts lately. And the biggest one has been this sedition slush fund, the $1.776 billion that Trump got in a settlement to drop him suing the IRS for them auditing him unfairly. So he's dropping the $10 billion. Now he's setting up this slush fund so that if you feel like the Biden administration unjustly prosecuted you, they persecuted and prosecuted you, you can apply for this fund. And that's supposed to include the election deniers and the January 6th people and all those kinds of things. People are furious that they're handing out money to criminals.
Can anybody make a claim?
Apparently, like that's going to be the question. Like there's going to be a lot of Joe claims in there. It's going to, it's going to make
like
PPP application process.
We went to the same place.
What I'm really worried about is, I hope they keep this money from going out. It's absolutely ridiculous. We should not be giving those people money. It's ridiculous that the president would have a slush fund that he could just hand sycophants.
Again, on the back of what we just discussed with these fiscal position issues and the populism.
And 1.7, that's a lot of money. I'm really concerned, though, that this is Trump sending a message to anybody, any future January 6ers out there, that if you want to take your tactical gear and your AR-15 down to the polls in a Latino precinct, if you want to go set a ballot collection box on fire, there's not just going to be a pardon waiting for you. There's going to be maybe a cool millie waiting for you, too, at least six figures.
Really? You think, yeah, okay. You think that's the message it's sending?
If you were, had bad intentions and loved President Trump, what would your takeaway be from this sort of thing?
Well, if you were one of the people participating in the events of January 6th, and now you just won a pardon basically on day one, and now you may have a payday coming for you a year and a half later with the election coming this fall. Yeah, you may have perverse incentives to do something stupid.
Yeah, you might want to re-enlist. But I think a secondary part of this that's come up is Trump apparently I can't believe this holds up, but who knows these days, that he is going forward. He is immune from all audits from the IRS, as well as are his sons, immune from audits, him and his sons.
I'm unauditable
And
forever and always. I cannot be audited.
and that's especially egregious on the heels of a stock financial disclosure that we got from Trump. In Trump 1.0, he dissolved his entire portfolio. He put everything into a trust. It wasn't a blind trust. This was not Jimmy Carter selling the peanut farm, but it's looking pretty good compared to what's going on right now. In the first year of Trump's term, he did not do any sort of trust stuff, but the only things that he traded in were bonds, sovereign and corporate bonds. In Q1 of 2026, he conducted 3,642 trades. That's 60 trades a day. Now, if you ask him, he's going to say, I handed my entire portfolio off to an independent third-party financial advisor. When you look at the disclosure report, though, there seems to be this little note, this little addendum to a lot of these trades, which says unsolicited. And my understanding is that means that this financial advisor did not advise that trade. That trade was made by folks who had access to the portfolio unadvised. The implication, of course, is that that's Trump, but I think you were saying that it doesn't necessarily mean that that was Trump personally requesting or making those
I
trades?
doubt it's Trump personally requesting. And based on the volume of trades, and we don't even know if this is the full extent of the volume, there's multiple people I would suspect have the ability to execute trades on the president's behalf with or without his knowledge. And some of them seem, impeccably timed to events of his diary.
That's exactly right. I think, I think we can all agree, technically right now, the law says the president can trade stocks. I think we can all sort of agree that that's absolutely ridiculous, and that there aren't a lot of companies that the president doesn't affect in some way or another by what he says or what his policies are. So it's pretty hard for a president not to insider trade. But when you cherry pick some of the worst items on this financial disclosure report and line them up with his public calendar, it gets ridiculous. The most ridiculous day was on March 11th. On March 11th, in those 24 hours, he bought $15,000 to $50,000 of Thermo Fisher stock. And by the way, the reason I'm giving these large spreads is because that's the financial disclosure says you don't have to give the exact amount. You can give it, in these tiered. So this tier is $15,000 to $50,000
dollars, right? That's right.
$50,000, right?
Yeah. Okay.
And he also bought $250,000 to $500,000 of Apple stock. Again, unsolicited. On that very same day, he made two visits, one to the Thermo Fisher manufacturing facility, where he said that they're a great company who's onshoring a whole bunch of manufacturing and you should definitely do business with them, and an Apple manufacturing plant where he essentially made that exact same argument. So, okay, if these had been months apart, I would be a partisan raising legitimate concerns, and that's where we'd have to leave it. But the fact that it's on the very same day, you have to think that whoever's making those trades at least has access to his calendar. A couple more. March 25th, he bought $50,000 to $100,000 of Micron stock. On March 26th, he calls into Fox and Friends and says, I just left the head of Micron. It's one of the hottest companies in the United States. And I'm giving you the day of numbers. He had this year before, leading up to that, there's multiple transactions here every single time. So when he went to the Thermo Fisher plant, he bought $15,000 to $50,000 of stock that day. He had been buying just in the 3 months of Q1 of 2026. He actually owned 250,000. He could have owned up to 250,000 at that point. So these are all multiple trades. Yeah, and so when he called into Fox and Friends, he actually owned between $217,000 and $530,000 of Micron stock. He just happened to top it off the day before he made the announcement. There's a bunch more of these. Another big one is Dell. He bought between $1 and $5 million of Dell stock.
That's the one that bothers me the least.
On 5 different occasions after that, he's been telling people to buy Dell stock. The last time actually coincided with Dell's all-time highest stock number. And then the one that bugs me the most, even though it doesn't line up quite as nicely as some of these previous ones, is on January 6th, he bought between $500,000 and $1 million of NVIDIA stock. And the very next week, I think 6 days later, he approved the NVIDIA chip sales to China. And I think that one upsets me the most because the volume, 500,000 to a million, that's a lot of money. And that's, those chip sales to China, that's supposed to be about national security. We've been told this entire time the reason why the United States government needs to nationalize these companies, needs to authorize these deals one off, like on a case by case basis, is because of national security. And he's out here profiting from it.
Can't make it up, man.
Oh, I forgot the best one. DoorDash. He made multiple purchases of DoorDash stock between 500,000 and a million before they did the DoorDash stunt where he had the DoorDash delivered to him. So that wasn't just a really bad PR stunt where he tried to do his everyman shtick and it completely blew up in his face. That was a bit of a pump and dump situation.
Wow. Yeah.
Or at least a pump.
These are, what can I say?
Just to ground my outrage here, if there are any MAGA super believers going, hey, he's making a bunch of money, who cares? Could you just remind me what you as a banker, the rules around the financial transactions that you're allowed to make?
Oh, sure. So any outside business activities that I would do would require approval by, compliance among other parties. As far as stocks go, I can't buy or sell any individual stocks. And that covers my accounts, my spouse's accounts, any of my dependents' accounts, including college accounts or other brokerage accounts, whatever. And then it's even more restrictive on something like mutual funds or ETFs. If there's more than 10% weight of any single stock, which is possible given how concentrated the market is today, those require independent compliance review. And only with their blessing may I engage in the transaction.
It seems to me like the president of the United States should at least have to follow the same rules the bankers do.
It seems like a bipartisan, pretty simple thing that all, basically just say all Congress people, you could only invest in index funds. I mean, if you don't like it, go home.
Another gift that the Republicans gave us in the last couple of weeks, Speaker Johnson actually did a press conference where he said that we want Congress people to be able to trade stocks because they don't make enough money and because they haven't gotten a pay raise since 2009. Now, I want to be really clear. We want our Congress people making six figures. Sure. Okay. I am not one of these people who says that politicians should make zero amounts of money, because then the only people who can afford not to work are going to be the ones we get in the office, and that's going to be a problem in itself.
At the very least, comparable salary to the geography and the people they represent.
Right. So if it's time to give Congress a raise, because it's been since 2009, but I'm looking at the salaries here, they range between $174,000 and $223,000 for the speaker. That seems pretty reasonable.
So you're telling me somehow Congress is the only place where we kept the lid on spending congressional salaries? That's weird. I wonder why.
Well, I mean, if you tell me it's time to bump that up a little bit, okay, let's have that conversation.
Right, but all you're seeing there is just the comp. You don't see all the fringe benefits and everything else in there. Get the hell out of here, man.
But I only make $174,000, so I should be allowed to be able to insider trade.
Not just buy and sell stocks. I should be allowed to insider trade.
What are we doing?
It's corruption, man. And look, they, debt holders, bond and sovereign debt investors see that, and there you go. There's your higher rates.
Well, just one last thing on Congress. Howard Lutnick had his big Epstein hearing, and the Republicans went real easy on him. Real easy on him. People got a little suspicious. Immediately afterwards, he donated $5 million to a Republican congressional super PAC that's run by Speaker Johnson's folks.
Let me say it back to you. Howard Lutnick had some kind of interview in front of Congress about Epstein. It was a bunch of softball questions. And then it came out that in the leading up to it, he donated $5 million to a PAC that may or may not give money to those people's reelection campaigns.
I believe he made the donation immediately after the hearing, but yes.
Oh, Jesus Christ. So he actually won on that quid pro quo. He said, I'll give you the money if the hearing goes well. And he kept his word. Good for him.
Well, I'm glad you found one silver lining. Hey, the last big thing since our last episode was the big China summit. I'm hoping to get Gavin from the Wall Street Journal, our good friend Gavin Bade, back on
Yeah,
to
we
talk
got to
a
get him
little,
back.
do a little postmortem on the trade war. But besides that, it seemed like a dud to me. The biggest headline was that there were no headlines. I know some folks are mad about the optics. Taiwan certainly concerned, but economically, it didn't seem like a lot happened.
Yeah, for the 20 odd CEOs that went over there, including Jensen Huang and Elon Musk, it seemed like a big nothing burger. I'm shocked that, I mean, I'm hoping that something so big happened that they didn't want to talk about it, because that is the big the two big headlines for me were 200 Boeing aircraft, which, just look at Boeing stock for the reaction to that news. Boring. Down from the initial 500, and I think the initial estimate was 1,000 planes. So it ultimately got slashed to 200. And then China's going to open up more of their beef market to U.S. imports, right? So the U.S. can export more beef to China. But, I'm sure that'll go well given current U.S. beef prices, right?
Well, I mean, and given the fact that they only buy our soybeans and whatever else they say they're going to buy whenever they want to throw us a bone.
I have to check those sales, by the way. I think that they did own up to the allotment, that the initial allotment they said that they would buy, which I said that they wouldn't, but they did. But I believe still they're significantly below prior years.
Well, it's not cool that it's a political decision for them instead of an economic one these days.
Right. Well, they work very hard to diversify that supply chain and use it against us.
Thank you so much, folks, for listening to another
That's
episode.
it?
Wait, you got anything else for us?
No, that was good. This was a tight episode. I'm very happy with it.
Well, thanks for listening to it, folks. We'll see you again in 2 weeks. Please drop us a review. Please share this with a friend. We'll see you in 2 weeks.
Thank you.